But let's address another set of earnings, and we've got the management of Prestige Estates joining in on the show right now. Irfan Razack, the chairman and MD at Prestige Group, on the show to talk about where their numbers are headed. Mr. Razack, great to have you on the show. Firstly, I want to talk about, pre-sales as well. You've reported a record pre-sale for the second consecutive quarter, despite actually Q1 being weak for you, right? And the numbers as well indicate that. Do you then expect this kind of momentum to continue?
Good morning. Yes, I think we are quite happy with the pre-sales. And I believe that we'll beat these pre-sales this current quarter. That's the whole plan that we have, because there are a whole lot of launches that we've planned in all the three cities that we are operating in. That is in Bangalore, Hyderabad, and Mumbai. Chennai, we have a big launch, but that will happen in the following quarter. So, but there is a lot of traction, and there's a lot of demand that is coming in, and the pre-sales are happening, and they're pretty robust.
Are you comfortable and confident about surpassing your 16,000 crore guidance?
More than comfortable.
Okay, great. You'd also earlier guided for doubling your sales by FY26. So by FY26, are we looking around 25,000 crore rupees worth of pre-sales then?
We are also adding up certain geographies. You see, like we were to be in NCR, but somehow the one project that we tied up, that didn't take place because the approvals didn't come through. But we are working relentlessly to see that we pick up something there, and that will also add up to the overall portfolio. And we are pretty confident. We definitely want to stick to some of the metro cities, and this is where the numbers will come from. And also, we are looking at scale in our projects, and this is the confidence that we have. And I think if we end this year handsomely, which we will, hopefully, and the next 2-3 years are going to be quite robust. And I believe there is a lot of scope still, and growth can come in without any problem.
Why are you looking at diversifying? First it was West, and now it's going to be North. Is that a de-risking model which you're consciously following, or has Bangalore saturated for you?
Morning, Nikhil. See, the main thing is, it's not about saturation. I can't draw this water from the same well all the time and I expect growth. So I have to diversify to different geographies, and the best thing to choose is to pick up the metros, and there is an opportunity there. There's a lot of demand there, and the number of players in that market also are very few and far between. So we believe that we go in and strengthen ourselves and also the market there. That's the whole idea.
Has there any change in business or demand for you in your main market, which is Bangalore market, especially after the new state government, after the government change in Karnataka?
No, the market continues to be quite strong. Only thing is, since there is always the changes in administration, change in government, the overall approval process gets a little sort of destabilized for the short term. And then again, once it falls in place, they see now we are in the RERA regime. So the main important thing is to get the approvals as quickly as you can, get the RERA registration, and then do the launches. So whatever launches we thought we could do in Q1 will definitely happen in Q2. And that will also boost up the Q2 sales. We had 1 month of Q2 is already gone by, and there's been no new launches, and we don't have inventory. But we are quite confident that the next 2 months will get this by.
When you will move into other cities, other geographies, let's say Mumbai and North, could that impact your aggregate margin picture? Because when you are entering into a new market, you will have to do something new, different, something which is a better value, something which is perhaps cheaper than what the dominant players there have to offer.
No. The most important part is never compete on price. Because the moment you start competing on price, you're only looking at cash flows, not at the bottom line. That we've never done. It's about service, it's about the product, it's about the location. And see, I always believe that you have to complement the existing players in whichever market we go to. And it's healthy. I mean, bring in more of competency, bring in more efficiency, and you actually are allowing the market to grow and bringing in confidence into the market. So that's what our purpose is, and we are doing that well. We did that in Mumbai. People were skeptical, and now things are looking very bright there. We've done that in Hyderabad. We've done that in Chennai. Chennai, of course, the approval process, again, something is likely to happen this month. If that happens, probably we'll have a large launch, if not this quarter, but for surely next quarter. So we have enough of pipeline. Only thing is the approvals have to come through, and the moment you launch, there is a pent-up demand in these geographies.
Mr. Razack, what about the outlook when it comes to the annuity portfolio? Because after selling off the substantial part of the office and the mall portfolio to Blackstone, you've embarked on rebuilding the annuity portfolio. So what kind of opportunity are you seeing here? What is the kind of exit rentals that you're targeting from this portfolio?
Absolutely. Now that this is a portfolio that we are now very keen to once again develop and create a large portfolio, and at some point of time either take that to a REIT or an IPO separately, one for office, the other is for retail. Now retail, we've already got now 3 assets. 2 assets are already trading. The third asset in Kochi will start trading this month. So the 3 malls are doing extremely well. The demand is quite sort of surprising to us also, and the retailers are pretty happy with the type of footfalls we are getting, and that is helping the cause. So at the end of, say, 5 years from today, 2020, not even 5 years, maybe 4 years from today, we'll have 10 million plus square feet of operating malls. We'll have a substantial amount of office space in cities like Bangalore, Mumbai, and Hyderabad, and also Chennai. So this will help us to get a substantial annuity income, and we are targeting something like 3,000 crores per annum, and that's very highly likely to happen. And of course, hospitality also, we are there. I think at the end of the next 4 years, we'll be operating with almost 3,000 keys with various brands.
So, Mr. Razack, just to summarize today's interaction, now, one side we are saying high tomato prices are having an impact on consumer inflation. High oil prices are having an impact on, commuting inflation. But you are of the view that the trend what you have in the industry which you present, which is the real estate sector, next 2-3 years at least, you don't see any kind of a slowdown, and the CAGR growth rate of last 2-3 years will continue. Plus minus could happen, but trend will continue.
No, trend definitely will continue, because see, one thing we must understand, that housing in our country is a need. It all depends on which target audience I'm addressing to, and I'm able to produce the right housing in the right location at the right price. The demand will always come. It has been there, and it's now picked up, and it's actually the speed is more. And 2 reasons for that is there's been a lot of consolidation also that's happened. So the beneficiaries of this is that many companies who have done well, who have professionally managed themselves and who have delivered, are the ones who are the beneficiaries for it. And I think going forward, and since we are a very diverse company, we are not only dependent on residential, we've got all the asset classes in real estate. The future is pretty bright. Oil prices going up low, that's all a temporary phenomena, and that keeps going, that keeps happening, and there's no control on that.
Appreciate your time. Thank you so much, Mr. Razack, for spelling it out for us and giving us a better indication as to how business is shaping up at Prestige Estates. So there you have it, pretty confident sounding Mr. Razack.